Welcome back to Alpha Recap. Markets closed for the day, and we're unpacking the biggest stories that move stocks: geopolitics, energy politics, and a rough session for chips. As always, if you have questions, you can reach us at stockalpha.ai.
Thanks, good to be here. There was a real cross-structure to today's moves, a kind of feedback loop between headline risk and flows.
So let's jump right in. Big themes first. We had three cross-cutting stories: deal flow hit by geopolitical risk, fresh scrutiny of energy sector ad spending, and volatility in semiconductors and related ETFs. Josh, what's your quick read?
I'd say it was a day where sentiment and revenue drivers both got hit. Geopolitics slowed deal pipelines, the energy ad story raised reputational risk, and the chip names showed how sensitive they are to positioning and news flow.
Let's unpack the first one: M&A and geopolitics. JPMorgan said April was a tougher month for deals because of Iran war uncertainty. So banks and deal teams were more cautious, right?
Exactly. JPMorgan noted weaker deal activity and higher execution risk. Put simply, when there's geopolitical uncertainty, companies hesitate to sign cross-border deals that could be disrupted. That translates into lower near-term fee revenue for banks and a pause in corporate transactions.
So that's not just a headline. It actually hits the economics of investment banks.
Right. And the other thing is, it changes planning. If you're a corporate CFO, you model a deal and suddenly add a geopolitical premium, timelines slip, and some deals just disappear.
Short reaction. Big move. Next up, the energy ad story. Consumer Watchdog released a report saying a Chevron-funded group spent $13.7 million on Facebook ads, blaming California policy for high pump prices. That story landed hard. How do we interpret that?
So what really stands out here is the reintroduction of reputational and regulatory risk for refiners. When a watchdog calls attention to ad spending and ties pricing practices to higher pump prices, it invites state-level follow-ups and raises the chance of hearings or inquiries.
And analysts flagged three figures in the report: roughly 29%, about 14%, and essentially flat at near zero, that they say shouldn't be dismissed as PR noise.
Exactly. Those percentages go straight into margin and scenario models. When you build out stress cases for refiners, you have to consider what happens if a state regulator looks more closely, or if public sentiment triggers policy changes.
Short reaction. Not what anyone expected.
Yeah, that tracks.
Now let's shift to semiconductors and AI, which were headline-heavy today. Intel finished the day down about 4% to roughly $96 on heavy volume, roughly 118 million shares. That was one of the biggest moves among big tech names.
That was not a great day for chip names. Intel's pullback is a reminder that large-cap semiconductors can be moved by sentiment, positioning, and headlines. Analysts pointed to liquidity and valuation metrics that suggested near-term risk.
At the same time, NVIDIA finished essentially flat, just a hair up to about $199 on heavy volume, roughly 124 million shares. So mixed signals in the space.
We saw a bifurcated market. Broad incumbents like Intel faced idiosyncratic pressure, while some niche names got constructive notes. Rosenblatt, for example, raised a target on Lattice Semiconductor, citing stronger AI-driven demand for low-power and edge silicon. That reinforces the structural AI story for specific vendors.
And flows were big in leveraged and thematic ETFs. The ProShares Bitcoin Strategy ETF rose 2% on about 137 million shares. A small-cap bear ETF climbed about 1.5% on roughly 176 million shares. And a leveraged semiconductor short ETF jumped about 2.25% on about 134 million shares.
Those flows matter. When leverage ETFs and thematic products carry outsized volume, rebalancing can exaggerate moves in the underlying sectors. That creates transient opportunities for traders, but higher risk for passive holders because rebalancing can accelerate intraday swings.
So the takeaway? Chips weren't uniformly weak. Some structural AI demand stories are intact, but positioning and ETF flows amplified volatility.
Exactly. Momentum indicates a bifurcation. Broad cap pressure versus niche strength in edge and low-power AI silicon.
Quick reaction. Yeah, absolutely.
Honestly, I was a bit surprised by this one.
Let's cover litigation and event-driven risks. 2 class action notices were filed that set short windows for lead plaintiff status in suits involving Oddity Tech and EOS Energy. Oddity was reported to have plunged about 50%. That's the kind of dramatic move that underpins litigation.
Event-driven lawsuits create discrete catalysts. Lead plaintiff motions, filings, and media coverage can trigger outsized volatility for these small caps. The EOS Energy lead plaintiff deadline was May 5th, so courts and dockets are active near-term catalysts to monitor.
Quick reaction, big risk window. Now for some infrastructure and healthcare automation notes. Bechtel and North America's building trades unions signed an MOU to modernize nuclear construction apprenticeships, which matters for contractor pipelines and small modular reactors.
Workforce readiness shortens ramp risk on large reactor and SMR projects. No financials disclosed, but this is a policy and project readiness play, important for companies that will bid on those projects down the line.
And in diagnostics, Molecular Instruments and Empire Genomics launched a ready-to-use in situ hybridization library on the Neopath Pro platform called Niche that could accelerate automated pathology workflows.
Yeah, diagnostic automation is an adoption story. If hospitals scale this tech, it can create recurring revenue potential for vendors that successfully embed into clinical workflows.
Short reaction. Interesting developments.
Yeah.
Microcaps and retail-driven activity also showed up. A microcap, Chanson, jumped about 3% on heavy volume of roughly 167 million shares. Nokia fell about 1.25% on about 120 million shares. Big turnover in both cases.
Heavy turnover in small caps can signal retail flows, speculation, or news-driven repositioning. That raises liquidity and volatility risk. People should factor that into scenario planning.
Okay, Josh, let's summarize the patterns we're seeing across all of these notes.
Geopolitical risk is still a dominant cross-market driver. Iran war uncertainty was cited as slowing deals and lifting risk premia. Energy sector political and reputational risk returned because of ad spending scrutiny. The semiconductor landscape looked bifurcated. Major incumbents showed headline-driven swings, while niche AI and edge players attracted upgrades. And leveraged ETFs continued to concentrate intraday liquidity and amplify moves.
That's a great wrap. Quick checklist on what to watch next.
Watch JPMorgan and other banks for updates on deal pipelines to see if April's weakness is a one-off or a trend. Look for any Chevron responses or state follow-ups to the Watchdog report. Keep an eye on analyst notes or corporate commentary from Intel and NVIDIA. Monitor filing activity and lead plaintiff motions for the litigations. And check ETF flow data to see whether today's heavy volumes persist.
Final quick takeaways for listeners. 3 bullets.
1. Geopolitics can slow real economic activity in capital markets. Deal pipelines and bank fee revenue were affected. 2. Energy political messaging can quickly become a regulatory and reputational story, so ad spend matters. 3. Semiconductors are bifurcating, and ETF flows are amplifying short-term volatility.
Perfect. If you're following any of these names or themes, remember this was a post-market close recap. We talked about what already happened, not trading advice. Analysts note these moves in data to help frame scenarios, but this is for informational purposes only.
Exactly. This isn't personalized investment advice. Use the information to think about risk, not as a recommendation to buy or sell.
All right, quick sign-off. If you have questions about anything we covered today, head to stockalpha.ai, where you can ask us directly and we'll answer live. For more market analysis and insights, visit stockalpha.ai. Thanks for listening to Alpha Recap.
Thanks. Talk soon.